Hello, folks. Today I'm going to talk a little bit about market mythology. I don't know if it's really mythology, but maybe market history. A little bit of makes me think of mythology when I think of the terms that we use. One's called the bull, another one's called the bear. Now, if you've been following the stock market for a little while, you might have heard of the mythical bull and the bear. I remember when things are going up, we think about the bull raising his head up. And when we think about the market going down, we think of the bear keeping his nose to the ground. Hopefully, you've been enjoying this record bull market, actually about the second longest bull market in history. It's been going for about 17 years now, since about 2009. And overall, we have had some adjustments, but it seems like year after year, for the most part, it's just been up and up and up and up. Well, you know what? Everybody gets blinders on, and all of a sudden we think, oh my gosh, I've been watching the market now for a decade. I think I understand this thing. Well, believe it or not, in our lifetime, our life lasts more than a decade. In fact, maybe close to 100 years. I hope so. But anyway, I've been around for a number of those. In our lifetime, if you're a Gen Xer, talking to you Gen X people, how many different times have we seen the markets change? As Gen Xers, we've seen the market go through several different changes. One time, starting around the 1970s through the 1980s, we saw the market going through enormous amounts of inflation, something like we've never seen before. So if you're a Gen Xer, you've learned that things can change. One thing is prices change. We've seen our money become devalued over time. Another thing that you probably lived through is where the market's been on fire and it's been incredible. One of the times we remember is way back around 1999, 2000, when we had the dot-com bubble. The dot-com bubble was an amazing time. Everybody was becoming a dot-com millionaire. All you had to do was invest in dot-com, and for sure you're going to make money. In fact, we saw the NASDAQ increase almost 40% in 1 year. Wasn't that amazing? And I'll tell you, all those people working in tech, they were ready to retire, but all of a sudden the market started going down. Well, the wisdom of today is, hey, just buy the indexes and over time, you'll be okay. Well, imagine you were invested in the market back around that time, 2000, and the market starts going down. Imagine the market's going down and going down very hard and hitting the ground at a level that nobody expected. Imagine your dollars, your money in the market went down perhaps 50%, maybe more than 50%. Well, with today's wisdom, you say, well, I bought in the index, I just need to buy and hold. Well, what if your money didn't come back? And what if it took 5 years, 10 years, maybe 15 years before you broke even keeping your money in the index? Well, if you're at 50 years old plus, are you going to be able to see your money, your stock portfolio decrease in value by 50% or more and not come back to where it was for 15 years? Well, think about it. If the money does come back up 15 years later, you've been back at break even, but what's happened in 15 years? In 15 years, the purchasing power of the dollar has not kept up with where it was 15 years ago. Let's say inflation's at 3%. Well, that dollar might be worth 45% less in purchasing power than it was when you got back to your own investment. So it took you maybe 10, 15 years to get back. That's what we call the lost decade in investment. And you're finally back to break even, but even though you're break even in the dollar amount, your purchasing power is only worth about 55% of what it was. So are there better strategies to invest in than just following the markets? Are we on the precipice of something changing and that we could be heading towards another lost decade? Well, it's possible. Remember, we had the dot-com boom. Some people say right now we're on the AI boom. So could the market keep going up forever? Well, it could, highly unlikely. We usually see a 10-year cycle where things go boom and bust. But right now we're on a 17-year cycle. So I can't tell you what the market's going to do tomorrow. But what I can tell you is the market will go up and it will go down. Over time, you will gain money at certain times in the market, and other times you will lose money. Is there a better strategy for people who are coming close to retirement, who need to rely on their retirement in order to be secure? Well, I'll tell you what, in my opinion, there are several good strategies that may be suitable for you to preserve your retirement in case markets markets go down, but also if markets are going up, we want to make sure that we're still participating in those market gains, which can be significant in order to keep up with inflation. So Max Drew, your friendly neighborhood CPA and investment advisor, if you choose to have me as your investment advisor. Maybe not your investment advisor, but if you need an investment advisor, feel free to contact me. Happy to talk to you about how we might be able to improve your investment strategy so that you can perform well in both up markets and protect yourself in down markets. So looking forward to seeing you in the next one. Thanks for joining me this week in our extended market update. Thanks so much for joining me. See you in the next one. Bye-bye. Follow, message us, or scan the QR code on the screen to learn more.